we'll get to the big story then. That's Aditya Birla Fashion and Retail, which has gained 10% after it said it will evaluate the potential demerger of Madura Fashion and Lifestyle Business, which owns brands like Louis Philippe, Allen Solly, American Eagle, into two separate entities. After the completion of the demerger, the company plans to raise some growth capital in the next 12 months. Abneesh Roy, Executive Director at Nuvama Inst Equities, now joins in with his initial thoughts. Hi, Abneesh. Lay out the, for someone who's not been tracking this story, tell us the importance of this demerger and how do you view it?
Yeah, thanks. Definitely, this is a positive development. We were expecting a sharp reaction to the stock today. So good to see a 12-13% up move. We think there is more headroom for the stock to do well in the near term and over the longer term because of the development which has happened yesterday. I would say that this is somewhat similar, definitely, to what ITC did with the demerger of its hotel business. In Aditya Birla Fashion also, there are two very different businesses currently housed in one entity. So we'll get a very focused play of the lifestyle business, which is the Madura. That is the more exciting business for us and I think for most investors, because that's obviously having those very strong 4 lifestyle brands, better return ratio of this part of the business, more predictability, more right to win. The leftover part of the Aditya Birla Fashion post the demerger, that will have the more retail businesses, the more competitive business of, say, Pantaloons and Style Up, etc., and the ethnic business and the luxury business. That part of the business, we need more clarity on what will be the fundraise, because that will need more capital, because that's more of retail. It is in funding stage currently. So I would say clearly investors will be excited about this. The stock has gone nowhere. It is quite cheap. 25,000 crore market cap with a 2,700 crore debt with just 14,000 crore of revenue. So it's quite cheap. If you see, Trent has done so well, 7 times the market cap, and around a few years back, market cap of Trent and Aditya Birla Fashion were very similar. So this is a good corporate restructuring exercise. Of course, this will take a few quarters. We need to know how the debt levels will be allocated, the 2,700 crore debt.
Just to, Abneesh, hi, good morning. Just to understand, AB FRL always had this whole bunch of businesses under it, right? Bunch of brands under it. So now with this demerger, is the understanding that sort of the better performing brands with higher EBITDA, higher margins, they get moved out into Madura? Is that the way to look at it?
Yes, that's absolutely correct understanding. So Madura will be the bigger part of the business in terms of sales and profits. It will be better return ratio business. It will be more stable business because it is obviously the branded part of the business, Louis Philippe, Van Heusen, Allen Solly, Peter England. It will also house Reebok, which could be a turnaround story. And of course, the innerwear Van Heusen is also listed here. So this is obviously much more branded, less retail because it is sold across the retail options, while the leftover portion will be the more competitive segment. But there is opportunity to really upsize and upscale from the unbranded to branded. And the ethnic, clearly there is good opportunity against Manyavar, and they have done a lot of acquisitions. The group has done a lot of acquisitions there. So I would say, yes, that's the more difficult part of the business. But if the funding is available, I think that will become more faster growth if the execution is correct.
So how would you value the two entities now, Madura and Aditya Birla Fashion Retail? What's the thought process?
So one is, of course, the stock is quite cheap as a consolidated business. Also, if you see on a 14,000 crore revenue, it is just 25,000 crore market cap with a debt of 2,700 crore post the GIC infusion. So the issue till now has been that SOTP valuation was not done. So the cash guzzling business, the less profitable business was not getting valued at a different metric. What will happen now once we have more clarity on the timelines and on the approval? We will move towards essentially SOTP. Currently, how we see, we have a target price of 275 before this event happened. And as the quarter results come and we have more clarity on how the debt levels, etc., get allocated, I think definitely our target price will also essentially get recalibrated. But in the current 275, you see bulk of the value will lie in Madura because that, as I said, is the more attractive part of the business. But yes, currently, if you see as a consolidated business also, it is hardly 10-11 times EV/EBITDA. And in terms of market cap to sales, again, it is quite reasonable. So this stock could re-rate, but SOTP valuation is something which will be needed because two very different kinds of businesses are there.
Abneesh, stay on. We want to get to your valuation numbers and actual targets and how they might move in just a bit. But let me first bring in Mangalam because, honestly speaking, he's the one who flagged this off. It was always there to see, but the difference was stark and glaring. The rise of Trent. Whereas Aditya Birla Fashion and Retail was absolutely sulking with absolutely zero investor interest almost. So Mangalam, I don't know if the company heard you in that earlier link or what sort of triggered this, but I guess investors are looking at it very, very favorably.
So far, the investors are looking at it very favorably. Whether the company heard me or not, I mean, I wouldn't give myself that sort of importance. But tell you what, just to understand whether this vertical demerger that the company is evaluating, will it unlock value or not? Let's talk about what the business is first and then what it means really for both the separate listed entities going forward. So this is the question that we're asking, if this exercise can actually unlock value. So let's look at the exercise and some numbers. As per the company's statement to the exchanges, what will each business hold? We have Madura Fashion and Lifestyle, which will hold brands like Louis Philippe, Van Heusen, the underwear business out there, Peter England, Alan Solly, American Eagle, Forever 21 and Reebok as well. Whereas the remainder, ABFRL, will hold Pantaloons business, the massive ethnic wear portfolio that they are growing, the fast-growing luxury brands and some of their digital brands, which are known as Tomorrow as well. So if you can look at these two businesses, you can classify them as one, which is a value generator, and the second one is a growth generator. Let's talk about both their numbers. Madura Fashion and Lifestyle brands, for the first 9 months of this year, revenue has grown around 5%, close to around 6,300 crores in terms of top line, margins of 15.5%. Whereas the other business, Pantaloons, will have revenue growth. The first 9 months, the revenues have grown 21%. And because it is in investment mode, the reported EBITDA margins are just under 8%. So one of them is a value driver, the other one is a growth driver. Now, assuming the current growth rate continues and with some additional kickers coming in from improved consumer sentiment and business focus for the next 2 years, if AB Fashion and Retail, which has grown 20% in the first 9 months, compounds at 22% on the revenue and 25% on the EBITDA, and Madura Fashion, which grows at around 10% over the next couple of years and 12% on the EBITDA, you are looking at a revenue of 10,000 crores, roughly 9,700 crores for AB Fashion and Retail on FY26 with an EBITDA of almost 800 crores. For Madura Fashion and Lifestyle, you're looking at revenues of close to 11,000 crores with an EBITDA of almost 1,800 crores at a margin of 16%. The question then is how to value these two entities, right? Looking at comparable numbers for companies like Trent, it would be prudent to ascribe a huge discount to Trent, which currently trades at 45 times FY26 EV to EBITDA. And if we give it multiples similar to players like Arvind Fashion, etc., at 20 times FY26 EV to EBITDA, the fashion and retail business, which is the resultant business, will be close to 16,000 crores in terms of enterprise value. And Madura Fashion and Lifestyle at 15 times would be close to around 27,000 crores, taking the total enterprise value of these companies to 42,000 crores. So that's the valuation unlock that we're looking at as against the current enterprise value of close to around 25 to 26,000 crores itself. But the question is, what are the factors that we're watching before jumping to further conclusions? The first one, what is the cash on books post the recent GIC fund infusion? What is the total debt and payables? Because as of September, it's close to 9,300 crores. How will this be split in both these companies? The expected growth capital infusion in ABFRL, and finally, the path to profitability and growth of both divisions are some of the questions we need answers to before we try to look at, evaluating the value unlocking decision that these companies have taken.
Okay, Mangalam, thank you very much for that. Abneesh, just to come back to the discussion that we were having and taking forward what Mangalam has also put on the table, if someone has to buy one of the two businesses, right, Aditya Birla Fashion or Madura, which one would you lean towards and why?
Yeah, I think that's a easier question. I think most investors we have also spoken to, and as an analyst, we also feel Madura, which is the lifestyle business, is a far more attractive part of the business because of 3-4 key reasons. So clearly, this will not need too much of dilution because this is a better cash flow, better return ratio business, better margin business, and more predictability. While the leftover business will need cash, and they have already announced that post the demerger, after that in the next 12 months, they will have a fund in infusion, which will lead to dilution. Second, of course, is that part of the business which will need dilution is far more competitive. You name it, every player is present very aggressively there. Reliance, Trend, Shoppers Stop, and a lot of the online fashion. Everyone is very aggressive there. That's more competitive. While the lifestyle is clearly far more right to win with very strong brands also. So that's more like a branded business. Madura is more branded business. So clearly better return ratio, no risk of dilution, and a option value of Reebok getting turned around. So that's housed in Madura. I think that can easily get funded through Madura's internal accruals.
Yeah, Abneesh, I guess the beauty with Trent was that they made what was perhaps traditionally supposed to be a wholesale business into a branded business with Zudio. I mean, it is one of the biggest brands that they ended up creating at the mass level, right? So just to understand, I mean, I'm sure you'll be reworking targets and as this demerger plays out, but what is what was your target on Aditya Birla Fashion and Retail earlier? And now with the new development, what is the kind of SOTP value you are ascribing to it?
Yes, so we had a target price of 275, and we were valuing obviously the combined entity at 12 times EV/EBITDA, which is quite reasonable. As Mangalam also highlighted, for the peers, if you see, it could range between 20 times to 45 times, 20 for Arvind Fashion and 45 times for, say, Trend. So definitely there is a case of re-rating versus 12 higher for Madura part of the business. My sense is for the leftover business, I think clearly the metric will be more in terms of, say, either EV to sales or different metric. We'll need to see when the actual demerger happens. This will take a few quarters, so there is no big rush currently. But clearly today's up move is one step. I think there will be more up move in the stock in the medium term based on how the approval comes when we have more clarity on how the debt of 2,700 crore at the combined level, how that allocation happens, what will be the kind of inventory and that allocation, what will be the kind of fundraise, say, in the leftover business. So yes, I would see that more upsides will be there. This is not the end. Today, it's a sharp up move, but still, I think huge comfort on valuation is there. And we will see on the target price as the approvals come.
So just one quick question. I think Mangalam put out a number that Trent is trading at, I think, 45 times, forward multiple, FY26. Going ahead, what could be the valuation multiple we could ascribe to Madura based on your assessment? It will trade at a discount because Trent has proved itself. The numbers are larger. But what could be the, going forward, the fair valuation multiple you think Madura could trade at?
Yeah, in the past, if you see, we have seen that these kind of businesses, if it's a focused play, it could definitely trade at a higher multiple. So it was just that we were not doing SOTP and most part of the investors also were not doing SOTP. My sense is Madura should trade closer to the 20 times multiple. I think the Trent is clearly a different class altogether, very focused, more of obviously it's a private label. So very focused, very little advertising, hardly any sales season kind of a model. So it's a different model. But yes, versus 12 times EV/EBITDA multiple, can Madura get a 20 times EV/EBITDA multiple closer to the demerger? I think that's a journey which will happen. And I would say that kind of a number is possible if the execution really picks up. Of course, here there is a Reebok kind of a option value, but initially that will need funding. So we need to...
So 20 times, Abneesh. So Abneesh,
yes,
is saying Madura 20 times and the leftover business, the one that houses Pantaloon and the others, what would the multiple be for that?
Yes, currently we have not moved to SOTP because this is something which will need approval. It will need a few quarters, but my sense is there can be at least 70-80 rupee there also possible. Currently also, if I see 275 target price, which we have as of yesterday, before this event, I think bulk of the 211 rupee was coming largely from the Madura part and the balance was coming from Aditya Birla.
Okay. Got it. All right, Abneesh, thank you very much. Good perspective. Good to have you on the show today. And we look forward to more conversations on this as more clarity emerges and we realize how the market is willing to value the new Aditya Birla Fashion and Retail along with Madura. We'll take a break on that note, come back on the other side and we put the spotlight on the auto sector. Most of the monthly sales numbers are in. So what's the picture looking like and what lies ahead for stocks? Abhishek Gaushande from Share